Bill Gross Pacheco, who's at the National Exchangers Conference in Las Vegas today. I work with Annabelle, I'm a broker associate as well at EXP Realty. Annabelle has this program every Wednesday, 2 p.m. Pacific time, 5 p.m. Eastern, on how to get your first multifamily investment. And it's designed for people who want to get started in investing, as well as investors looking for good deals, and how to help their family and friends increase income and, most importantly, build long-term wealth. So when I knew that I was going to be guesting today, I was looking for somebody really special to bring that would bring great energy for us, as well as great information and opportunity. And I called actually one of the sages of Los Angeles real estate, Lloyd Siegel. Lloyd runs the LA Real Estate Investment Club, and they have an upcoming LA Grand Expo event on October 30th on Sunday, all day 9 to 6 at the Skirball Museum. I said, Lloyd, I need to help teach people how to invest passively and buy multifamily properties around the United States. Who are the right people? And he said, right away, you got to talk to the Kitti sister.
Good job. Yeah.
So once I realized that Kitti was spelled K-I-T-T-I, not K-I-T-T-Y, we're in good shape. So I'm really excited to.
Yeah.
Well, hold on a second. Mute everybody but you guys. Maybe a little background noise. Nancy, unmute. Where'd you go? There you go. Unmute. No, you're unmute. Good. So I'm really excited to introduce Palmy and Nancy Kitti, the Kitti sisters. How you guys doing?
Hi, great. Thanks so much for having us, Bill.
Good. And as you look at the camera, Palmy on the left and Nancy on the right. And we're gonna have a quiz. They're gonna switch, and they have to guess which, if you know which one is which at the end of the day. So just give me a little background. How did where did you grow up? Where are you from originally? Then how did you get started in real estate?
Yeah, so growing up, we have witnessed the hardship of working towards financial freedom. As children, we watched our parents struggle with long hours while they're trading time for money. They were never available in our lives. Like they never show up at our school open house, basketball game, or even our graduation party. Yes. But we knew that they were working really, really hard because, so that's why it led us to work really hard to justify their sacrifice and their hard works toward financial security. And our dedication pay off. In 2010, we landed like our dream client, BB. They're like the biggest premier fashion premier brand at that time, and we became really successful fashion manufacturers. In fact, we were so good at it that it was our only source of income because we thought that was our purpose in life. And then one evening when we were making our dinner, and dreaming about our next vacay, and then Palmy's phone actually got pinged, and she shouted across the room and said, Nan, BB is shutting down all their stores. And just like that, everything just came crashing down around us. I mean, right? We were definitely in a panic mode, and we realized we didn't have any backup plan. What is the safety net? We have none, right? So we had to act fast, and we did everything we could. We start, researching and take the time to, hey, what do we really want to do in life? So, and we swore to each other that we would never only rely on one source of income again. So we dove headfirst into flipping business, which we like. However, we were still trading time for money. And just like our parents, they were too busy providing for us. And, we start missing out on family activities. So we kept searching and searching. And then that's when we found apartment investing. Yeah.
Wow. So inspiring. And I remember you said BB, I said, I thought they were out of business. And then magically that's where the story ends up. So isn't it interesting how adversity makes us more successful sometimes?
Yeah, I think that's where the test is, because most people, when they meet adversity, there's two options. You give up or you go forward and you make that something, you create something out of that. And that's what Tony Robbins says, life can happen to you or happen for you. And I think that was a really pivotal point in our lives where we were okay, that's not going to happen again. We can control this. Let's figure it out. It's figure outable, basically.
So what was your first step to find real estate? Where'd you go to discover real estate as an option for you?
Yeah, it was really funny. So, a lot of us, when we're successful in one arena, we tend to get kind of stuck there, and we don't really want to move into something else. So what happened was Nan was on Facebook, and then she's like, Palm, there's this real estate event happening in town. to go. I don't want to be sold anything. I don't believe in that kind of stuff, because my mind was like, these people are there just to trick me, so I'm not going to buy into it. And then it was raining really hard and we didn't go. And because I'm like, I don't want to go.
The next day,
I
actually told her, we gotta go. Let's just go. It doesn't hurt us anything. So we went, and basically we got started by attending a live event, and that's when we got into real estate investing business.
Yeah.
Wow.
And that's how we started even just flipping.
And where was the event?
It was the Fortune Builder one. I don't know what it's called.
Fortune Builders with Van Merrill.
Yeah.
So you started with them. How long did you stay with Fortune Builders? Did you join their program, or did you just check out the meeting and then went from there?
So we have been doing flipping and business since 2017, and now we are moving into we have been doing apartments since 3 years ago at the same time. So yeah.
Okay, so are you still with Fortune Builders? Or are you just doing this on your own, or how are you doing it now?
Yeah. So we currently turned full time to do apartment investing. So we don't flip anymore.
Got it.
Yeah, house.
Okay, so people on this phone call, I think, are looking to get involved in investing in multifamily for the first time, and many of them, like you, bought and flip houses or own rental properties. What was it like the first time that you bought a multifamily property? What was that? That's a step up. What was that like?
You know, the first time we started we were passive. So for multifamily, as most of you guys know, there's the active side and there's the passive side. Because we were living in a California bubble, we really didn't understand any market outside of basically Los Angeles County, to be honest. So what we decided was, okay, we need to start investing passively with really strong operators in certain markets, so that they can justify to us why that market is great, tell us and teach us everything we need to know about that market. And then we can let their performance basically be our guide to see where should we invest, even as an active potentially down the line. And so that's how we started. So in 2017, we jumped into passive invest in several deals to test the market, to test what's happening. And when we did the first time, you know, we were completely sold on multifamily. We were like, okay, this is awesome. And so we jumped in right away. Didn't really know exactly what's happening. Know now way more, but like it was really great. It gave us a sense of security, because we knew for the first time in our lives now we have multiple stream of income.
And we don't have to trade time for money.
Yeah, it was like, wow, that's a great gig.
You two are funny together, by the way. I love the way you can work. So where was the first property you bought?
Yeah, so our first property as apartment operators were in Phoenix, Arizona. As a matter of fact, we closed August 2019, and now we're in escrow to sell the property, which is going to be closed in November. So within 2 years, we're able to return like around 90% to our passive investors.
Fantastic. Now, a little question on the dynamic. You guys are a team. How do you work together? Do you split jobs? Do you work together? Do you just finish each other's sentences all day long and look cute? What do you guys do?
So Nan focuses more on investor relations and our communication in general. I focus more on acquisitions, asset management, and dealing with kind of like that side of the business. So more of the day-to-day operations and business plan, just kind of guide what the property is going to do, you know. So it's like it's very good, because like we have very different skill sets, and so it worked out really well.
Nice. Well, you guys get along well. Now you guys are sisters. Are twins? One older, one younger? What's that?
I'm older.
You're older.
We're real. We're not adopted. At least we don't know yet.
True confession, I started in real estate myself, working with my brother as well. And there's a strong bond there. And in real estate, I heard Grant Cardone say that you just can't make it massively in real estate without other people. And when the other person is your sibling, like, you can't break that bond. My brother and I could fight, we could kill each other, but we both come back to life and work together and hug each other and say, okay, let's not do that again, right? Yeah. There's a strength there with a sibling that just hard to explain to people, don't have that. So, well, good for you.
Definitely.
So, anybody on the call today? Now, my approach is to be more interactive.
Yeah.
I think you learn more when you ask questions. If you have a question, just know there's 2 or 3 other people, the same question. This is being streamed live as well as recorded to YouTube and Facebook. So there'll be people watching this. And so the best service you can do for other people might be to ask that question. So whether you want to put it in the chat box or raise your hand or just jump in audio, I'm fine with that. If I'm not fine, I'll mute you and you'll know that's not good. But I'm fine with that, making it interactive. Also, if you're watching it live now on YouTube or Facebook, if you put comments there, I should be able to pick them up and respond there as well. So anybody has a question, you can raise your hand, put it in the chat box, or just in audio, just jump in when it's good. I talk a lot. I think when you have a sibling, you're used to fighting for the oxygen, right? You're used to fighting for you guys to talk. So let's talk about what you guys do today. You not only are investors, but you also are, I think, syndicators. Is that correct?
Right. Yes. Yes.
And so describe what that looks like. What is it? If I was considering, I want to play with Palmy and Nancy and I got some extra cash, what's that look like?
So for those of you who don't know what is apartment syndication, I will start off with that first. So apartment syndication is when you pool together like money from investors and we go tackle like big deals. And what does that big deal do for you would be like economy of scale, like, and where you have access to deals that you normally don't get to have. You get to leverage other people's team, expertise, and relationship. As you know, like real estate, multifamily is all about the connection. Winning deals, it's more than just a dollar sign in that offer. It's like if the seller knows you, if the broker knows you, and they have confidence in you, that's when you actually win the deals. So to get back, what is it like to work?
So basically for us, what we do is we don't do funds, we do one-off apartment investments. So for example, right now we finished subscription, so I can talk about it. So we have an apartment complex in Atlanta, Georgia. That's 244 units. What we typically do is
Whoa. I didn't work that big. That's good size. That's a big chunk, ladies.
Yeah. And it's all possible because of the syndication model. So basically, we have an investor list that we have pre-existing relationship with all these investors. Once we have a property available, we send out a blast to that specific group. And then they join us on our webinar that gives you an opportunity to invest. At the end of that, like for instance, we just did this one on Wednesday. And
Last Wednesday.
We opened up subscription Thursday, and by Friday, 24 hours, it's done.
Ooh. So can you talk about the deal now that we missed out on it? So make us regret it. Be the girl that I missed who got engaged. Tell me about it a little bit.
Yeah. Well, like
244 units in a suburb of Atlanta, about 10 minutes away from the airport, which is the busiest in the world. So Atlanta, you'll learn as you go in this business, is one of the hottest markets in the country as far as rent growth, as far as affordability for large cities. And also it's one of the cities that did the best during the pandemic. Most of the cities that are in the Sun Belt where we invest in have done really well during the COVID pandemic. Nice. These would be like cities in, like Phoenix, in Dallas, Fort Worth, Florida, stuff like that.
So 240 units, what was the sales price?
So the purchase price was $29.4 million.
Wow.
And so basically that's how syndication work is we're not putting all the money from our pocket. So a group of investors.
Oh man.
I know, right?
It's all yours, right?
Yeah. Well, this allows us to buy more properties, and this allows for many sophisticated or accredited investors to be part of this pie. So they don't need to have millions of dollars in their bank account, or they don't need to know everything about Atlanta, or even deal with tenant toilets or running the property.
Or just even sign on the loan.
Right. So like this allows them, enable them to like, hey, put their chump change, like small chump change into this investment and see how it grows. Because ultimately we invest so that we can have build our long-term wealth.
Sure. And so I'm just curious, how much is chump change? What's the minimum chump change?
That one is
so typically our investment is $55K to $75K depending on each deal.
Yeah, but that one was 75.
75 is a minimum.
Yeah.
And approximately how many investors do you have? Are you able to share that? Or is that, if I ask you a question, I'm curious, if it's proprietary, just tell me, I'm okay with that. But
so are you asking for that particular deal or in general?
Yeah, on that deal, you have $29 million. How many people did it take to get there?
Around 70.
Wow. And
Can I ask
so,
a question? What is the return?
That
For-
specific one was
I mean, it's mind blowing. I mean, if we say it, people don't believe it, but it's actually
it's 100% return and 8% cash flow.
is
so
it
in
some sort of a value
so
add?
if we put, I'm sorry. So if you put $50,000 in the deposit in the pie with all the investors of purchasing a property like that, it's very interesting. And I've been wanting to invest, and that's why I enjoyed this group here. So what would be, you said 100% return. So we get 150,000 and what?
so basically
so,
what it,
so it's 2x. So 100 is 2x, right? So you put 50 in 5 years. The projection is you get 100 back. So you get 50,000, which is return on your investment, and then 50,000, which is inclusive of the cash flow at the sale of the property. So you get two sources of income or like returns. Partial is from cash flow, obviously 8% projected, and then the rest is from when we sell the property.
Okay, and another question that I have for you, because I'm a real estate agent as well from California. I also work with commercial real estate as well as residential. And for many years, this is something I've always wanted to do. But the question is, once we invest, are we also going to be on title as part of the corporation?
You're an equity partner, so you are you have an ownership percentage in the company. You don't. It's the company is on title. It's not like it's not the person. So it's our company. So in fact, for example, property 3245 LLC, that's what's on title, and you have a percentage ownership in that company.
And what happens if, God forbid, something happens to me? I die in a car accident or something? Then
Yeah, I mean,
part goes to my trust.
Yeah,
Yes,
yeah, it goes
definitely.
through your trust. It's like whatever system you have set up as far as like will, a living trust. That's what I mean. That will be the same with anything else, like your stocks or your bank account. So same thing.
Right.
And how
I'm
long
not-
will I get the 100% return? Like, how long 5 years? You said within 5 years
Yeah,
so the projection is 5 years, but
or less?
yeah, or less.
yeah, but most of our deal has been less. Even though we have projected 5 years, we have a few deals going full cycle within 2 years or less period.
Okay. Well, I'm very interested into learning more about this. Are you guys in California?
Yes, we're actually in Los Angeles. Where are you in?
I'm in the Northridge.
Okay, so not that far. Yeah.
Are you
Well, let me-
realtors too?
No, we're
No.
not. We are flippers.
Okay, then we definitely need to work together because I'm a
Yay.
realtor and I have to find the deals that you guys are looking for and maybe find you some investors. Actually, I have a lot of investors, so I'm very, very interested to meeting you.
So Hannah, that's going
Yeah.
to lead me right to the next thing I wanted to do, which is in the chat box. I'm going to put a link to anybody, and I appreciate it. And I don't want to cut you off. I just want to stop right here and give everybody who's interested a chance. If you want to reach out to Palmy or Nancy to get more information about their program, there's a link in the chat box, kittysisters.com/5-little-known-markets. There's a hyperlink there, and I'll share the screen and show you. But basically, you just go on the screen, and once you're done looking at the picture of the two of them and saying, "Wow, I wish I had a sister like that," or maybe you do have a sister like that. I miss my sister. I have a sister, and she's sweet. I miss her. You can put in your name and information there, and they'll reach out to you and take the next steps, which sounds like invite you to a webinar. Well, let me ask you, Palmy or Nancy, what would happen if Hannah or I fill this out? What's the next step in your process?
So basically, this is for like people who are interested in the 5 little known markets to invest in right now. And then once you connect with us, we just hop on a call and to get to know you guys. I get to know you and see how can we help you.
Yeah, so basically when we first started, like we said, we had no idea what hot markets are out there. And so in multifamily, there's gonna be a lot of people telling you, go invest here, go invest there. But you want to invest in the best markets because your returns are really predicated on where you invest and who you invest with. Because you have to make sure that you're gonna invest in a market that have very strong population, economic, and rent growth. And so if someone told you Detroit, Michigan, it's maybe a great city, maybe 40 years ago or something, but that's not a market I would recommend to invest in. Like we wouldn't recommend that at all. And so anyone can give you any projections, but you need, as an investor, you need to understand these markets yourself. And so that's a first step, and for you to kind of like have an idea of like, oh, these markets are available. Didn't know that these are strong markets. So that's kind of how it starts.
And so also in chat box, I put their email address. So if you have questions, you can go there.
Yep.
The Kitti Sisters, Kitti Sisters at thekittysisters.com. And you have to say it fast 3 times if you email
Yes.
them. The Kitti Sisters at thekittisisters.com, the Kitti Sisters at thekittysisters.com. I can't do it. Okay, I'll just email you. Okay.
Amazing.
So there you go. So Hannah, that's a way you can reach out to them as well, right?
Yep.
Definitely.
Good. Other questions? Hannah, I don't mean to cut you off. I just want to kind of stop there to give other people a chance also who want to reach out and contact them. Any other questions regarding their opportunities? I do believe, now you mentioned the 5 little known markets. You just finished subscribing your investment in the ATL.
Yeah.
So where do you think you're going to look at next?
I mean, right now we are very bullish still in the DFW, which is Dallas Fort Worth, the markets in Arizona, markets in Florida. Those are strong markets. So anywhere in the Sun Belt, major metropolitan area, those are the areas where we're really targeting.
So one city in the Sun Belt, major metropolitan area, is Los Angeles. How do you feel about Los Angeles for investment?
Yeah. Also, the other criteria: landlord friendly, business friendly. So doesn't qualify. Yeah.
There you go. Yeah, but okay, political. Definitely not landlord friendly. That's really a whole.
We definitely love living in Los Angeles, but we love investing, where, our money will make money.
Got it. Okay. Well, we love having you here in Los Angeles, and we love you being successful. So it sounds like you like the DFW. Sounds like where you're going to look for your next deal. Is that what I'm hearing?
Yeah, I mean, we have very strong broker relations. Like Nan had mentioned, these deals aren't really won or lost based on pure numbers. It's really on a relationship you have with the broker and the seller, and how confident they are that you're going to be able to close. These transactions are large, and they don't want to waste their time with just anyone. You can come in, and especially California investors who are new, typically what brokers will see is like, they'll flash like, hey, I have money. It's like, so what? Everyone has money in an apartment game. That's not the point. Can you close? Do you have a track record? Are you difficult to deal with? The broker world is such a small world. There's probably a handful of brokerage in each cities. They know each other. They'll talk. So if you screw up one transaction with one house, they're all gonna know, and you don't want that. You pretty much ruin yourself.
As a real estate broker, now I'm much more the high volume transaction oriented residential broker. So, and I do smaller houses here in LA. So I don't, I close 30, 40 transactions in a year. I'm constantly looking up real estate agents to call them, text them, email them. It's amazing how many are like hidden because they're afraid of people finding out who they are. And the people who I find are successful, you can find them. There's nobody chasing after them. And that's an indication of success. So is there a particular network that you guys are involved with or work through today? Are you involved with like Bigger Pockets or some other of the national real estate investment clubs or anything like that in particular?
No, and we're like, most of our time is like we talk to our investors through, like our Instagram account or Facebook group or our website actually. So.
Okay. And I know I met you through the LA Real Estate Investment Club. They have an event coming up. Are you guys planning to be there on Sunday, October 30th, 31st?
Yes.
Okay.
We're going to be out of
speaking there,
town. We're going to be out of town. So if we can make it back, we will try.
Okay. Yeah. Well, I will be there. I look forward to seeing people who want to participate. And I know it's a Sunday. I don't like working Sundays, but it's a big event. So he had an event on Thursday last week.
Where it is? What is this event on the 30th? I'm just sorry to interrupt you.
No problem. Thank you so much. So it's the LA Grand Expo.com. Let me pull it up real fast. It's being held at the Screwball Museum.
Really fancy.
But I'll tell you, on one hand, it's fancy. On the other hand, free parking and no charge for the event. So if you go to lagrandexpo.com, it's a great venue for Los Angeles. And on a Sunday, it's terrible to get there during the week, but on a Sunday, there's no traffic at all. So it's really a great opportunity. I think particularly for new people, there's different coaching companies that are going to be there. I know that Lloyd Siegel has a program, LAREIC. One of the other co-sponsors is Sam Sadat. Sam's Real Estate Club. There'll be speakers all day long from 9 to 6. So whatever time you're there, there'll be a chance. So it's Sunday, October 31st at the Screwball. Again, it's free parking, free admission. And basically, I go there, frankly, because there's so many great vendors and people I work with in real estate. I'll share with you, in my world, I'm constantly dealing with eviction problems, with squatters, stay over tenants, heirs who don't belong in the property. And there was a great vendor there who's a landlord advocate who I met up with, and he's actually helping unleash 2 of my listings that otherwise were going to sit for a while. So I want to make a lot of money for having gone there. So as a real estate professional, it's great for me to meet other vendors who are there. And I think for somebody who's new, there's a whole list of some presenters that will really teach you different niches, and you can go into one spot. Now, I do know that they give an overview, and then they're going to present to you, a coaching program you have to pay for. And I know, Palmer and Nancy, you talked about in the beginning how that didn't really sit well with the way that you wanted to go. But I will say that this is a chance to at least hear them and get the concepts down and find where you want to learn for free. And there's about 20 different speakers over the day period. So if you're there, come by and say hi. I'll be there afternoon. And we'll have a booth there for eXp Realty. So hope you guys can come by and say hi.
Definitely.
Good. Who else has a question?
Thank you so
Hannah,
much
Mary
for
Hannah, I
sharing.
see your info.
I said, thank you so much for sharing. This is very nice of you. Thank you.
My pleasure. Thank you. Thanks so much, Mary. I always like when people give me compliments and are nice to me. Thank you. Okay. Who else has a question or comment that you have here for two? So many people tell me, now I have to admit, I never had the ambition to do what you guys do. And I admire it, and I'm not putting it down. It just wasn't my style to raise money and syndicate and multifamily out of state. I think I'm going to move into that over time. I like what I do a lot. But what I will say is people ask me all the time how to get to where you are. You're there. So here's your chance on the phone, or if you're watching, feel free to ask the question, how can I get from where I am to where you are? Here's your chance to ask professionals who've done it. So who's got a question? Raise your hand, put in the chat box. I don't see any unanswered questions.
I have a question.
There you go. William Holmes, how you doing?
Hi, William.
How are you doing?
Good. We're good.
Oh, someone else had a question?
William, you got the floor.
I was 2 questions. One, in terms of most syndications, you talk about accredited investors. Are you looking solely for accredited investors, or anyone that have the cash and capital that you're familiar with invest? That's one. And 2, is your goal to get in and get out, not hold long term, but short term investment, less than 5 years?
That's a great
So
question.
the first one is, so our industry is really heavily regulated by the SEC. And so when we do our solicitation, it's under 506B. So what that means is we have to have a pre-existing relationship. But what that also allows is not for us to bring on investors who are considered sophisticated. Now, that's a pretty vague definition. It's between you and your maybe CPA to decide if that's you. Predominantly, if you have some real estate experience, if you're a business owner, a lot of time you can consider yourself sophisticated. And of course, majority of our investors are accredited, but we can take up to 35 sophisticated investor per deal, and we've never maxed out.
So to answer your question, yes, we do take non-accredited investors. It's just that we need to have a pre-existing relationship with, and you can be on our investor list if you just contact us and just give us a call.
And we'll have a conversation on the phone.
Yeah.
Second question was sorry, what was the second question?
There's the goal, short term versus less than 5, rather long term.
Yeah.
Hold.
So
yes, definitely.
For us, we realize that in order to help people accelerate their ability to grow their passive income, we need to do this fast.
So what we call is we have what we know is wealth has a need for speed. So we love speed. If we can turn a property and we can hit the projection less than 5 years, we're definitely going to consider selling the property, because we know that our investor, they want to see this this grow rapidly, and everybody's situation is different. And that's why we're in a process of selling 2 of our properties that we've been holding around 2 years and less. So So
our goal is to get in and out as quickly as possible while maximizing our investors' returns.
Thank you.
You can tell by the way they talk, they're quick.
Yes.
Right.
bring us
And they came from fashion manufacturing. Fashion manufacturing is a fast business too, right? So
Yeah, it's
that's what
super
they're
fast.
thinking.
Yeah, it's, I mean, honestly, that was a very difficult business. So
Yes.
people are not as great. Like in apartments, the people we deal with on a day-to-day basis are much, much better people.
Well, thank
Thank
you. I
you.
take that as a personal compliment. So Mike asked a question, which is what percentage of the transaction, you mentioned you use an LLC format, what percentage do you keep as a general partner? Now, obviously that can vary based on the deal. So do you have some basic parameters you can discuss?
Yeah,
Yes.
typically just 80-20, very straightforward.
We just like to keep it really simple, which is 80 and 20 split.
So 80 to LPs and 20 to the general partnership group. Anything super complicated, we feel like if it takes us longer than 5 minutes to explain the structure, that's not for us. We want it super simple, very straightforward.
Yes. And then
Got it.
we think like this is a role, like a standard compensation where, we will have time to like actually put in the time and hours to make sure this business plan is going to do well and stuff like that.
Now, do you typically put capital into your own deals?
Definitely. We always want our
Hold it. Look at that smile. Look, when I asked that question, like, heck yes. Go ahead. I'm sorry.
Definitely, because we're bringing these deal and we're making people like multiplying like money like almost double like within 2 years. Definitely,
We want in on that too.
we want in on that, right? Like we want our money to be
I got
double.
it.
And frankly, you want your GPs to have skin in the game, because if they don't have skin in the game, why? I mean, I'm not saying that they'll run away and not care, but you want them to care, because if they lose, they'll also lose their own money.
Right.
Yes.
Exactly. Well, you don't want them to lose their own money. You want them to prevent losing their money so they'll save your money. But okay, got it. Okay, another question we got is what preferred returns are you offering, or do you offer preferred returns?
Right now, we're not doing any preferred returns.
Because typically,
Well, explain what that is first, and then
Yeah,
explain
so
what-
preferred return, basically, it's sort of like, so basically when you do a structure like that, there's a class A and class B. So the people who are in class A, almost like single family, like first, like if you're on title, but this is not on title, but first in, first out. So they will get the cash flow before we get cash flow. So if we say you have a 6% preferred, each year we have to basically tell them like, I'm going to give you 6%. If I can't give you 6% this year, I will carry this forward to the following year and I'll owe you that. So for instance, if I gave you 5%, so I owe you one from year one. Now year two, I'm going to have to give you 7% or carry it further. And then it gets complicated with the split on the back end. Right now, we're not doing that.
and on top of that, if you notice, like many preferred returns is actually 70-30 split, meaning that the investor keeps 70% and the general partner keeps 30%. And we feel that it should, like for now, we just want to keep it really simple, 80, where passive investor get 80%, and then us just getting 20% only.
Yeah. Okay. Well, I think also part of it is you guys are hungry. You guys are building your portfolio. You're building your list of investors and customers, and you always want to try to catch people on the way up in their business. They're going to bring you along with them. And I appreciate you giving these details. I think oftentimes some people don't want to talk about it, but I sure appreciate you sharing that.
We
Okay,
love
good.
answering these questions, so
Yeah.
bring them on.
Ooh, okay. Okay. Let me ask you this question. What was the, I'm sure you see people all the time who talk to you about a deal, they talk to you about a deal, they don't write the check. They call you the next time, they talk to you, they don't write the check. What do you think holds them back? And what would you like to say to those people anonymously, if you could?
I'll let Palm start
Well,
first.
I would say that they may not, it depends on the case, but for the most part, I think like they don't trust the asset class. They don't understand the value of being in the best risk adjusted return asset class there is. So there's a lot of like misinformation. Maybe what ends up happening, and I think Bill, you'll know this, is like you'll have a cousin, an uncle, an aunt who aren't necessarily savvy investors. And every time you mention, I'm going to do these awesome investments, they talk you down. So you have a fear of going back to them and having to hear them yap about, oh my gosh, I told you not to do that apartment thing. That was like a scam, a joke. So people don't execute because they have a fear of that disappointment or having to deal with that. And in fact, like if you get educated and you learn about what's actually happening, you'll realize like those people you shouldn't listen to their advice. If they're well off, if they're financially free, then you listen to them. Don't listen to people who are still in like hustling. It's not wrong to hustle, but like they may not know as much about this. And so like don't let that fear prohibit you from actually doing something that is actually super, super great for your financials.
So to add to that, another that I see a lot is like, I don't have time to do this. Well, you know what? And that's why you're in apartment syndication, because it's truly passive where you don't need to deal with anything. You don't need to deal with the accounting. You don't need to manage the property. You don't need to do anything rehab. So from not having time is actually, this is the way you gain back your time by investing in an asset that is producing like that income. Is income, right? So you're actually slowly gaining back your time, which is your most precious.
You know what, asset. Bill, you know, one thing we haven't spoken about is the tax benefits. So if you don't mind, like we can just go into that real quickly.
Please.
Yeah. So this is probably the biggest thing that people can do with apartment investing that you can't do with other asset classes.
I think once you know about this,
so basically in 2017, Trump passed the Tax Cut and Jobs Act. What he did there, he allowed for bonus depreciation to be applied to existing multifamily. So without going to like the detail, simply put, if you put in 100K as an example, and the property can be depreciated at 100% in year one, you will be able to get a K1 paper loss of $100,000.
Basically,
that happens
beautiful
on most properties, anywhere between 80 to 100%. Our last property was 112%.
So basically what that is the bonus depreciation, instead of doing the depreciation like
the 27 and a half years, it all gets compressed into year one.
Yes.
And so if you're passive, you have stocks, you have single family rentals that you are not managing yourself, you can offset that gain. Yes. And then if you're, and so from there, what you see is like, if you are in stocks or anything else, you're paying taxes on that. So it's not about how much you make, it's really about how much you keep. And the best vehicle right now that allows you to offset potentially 100% is apartment investing. And that's all passive.
You know, I'm with a real estate brokerage, which has just really done phenomenal.
Yeah.
And I have so many friends who are millionaires because the stock they've earned, they're moving to Puerto Rico to avoid the federal tax. You live there for 2 years and change your status. But really, they could buy an apartment building probably in the year that they're going to cash in their stock and offset that income in that year and end up with an apartment building almost for free if they really plan to profit.
And it's cash flowing.
I need to.
Bill,
you totally
nail it. You totally nail it. You're a really smart person, so you got it.
Yeah, the point is, make money, pay legally as little if no taxes at all, and then enjoy the income that the property is producing.
And live where you want to live. You don't have to live in Puerto Rico. You don't have to live in Puerto Rico, or if you want to live in Puerto Rico, up to you, right?
It's nice. It's not that nice. It's not as nice as California. Let's be honest.
Go live in the Bahamas.
People don't. Bahamas are nice to visit. Hawaii, now that's a whole nother ball game.
I hear they still have issues with like the electric grid in Puerto Rico. So
for sure, and the internet, and that's what challenge you when you move your business there. And like I live in LA, I have not one but two high-speed fiber connections in my house. So for my office, I have like the greatest internet, better than most companies have.
Yeah.
But in Puerto Rico, they're lucky to have the old Ethernet style, and it's just a whole different ballgame. Okay, so we're going to wrap up here quickly. Any last questions? I don't see anything in the chat box. I think I hit everybody. I hit everybody online. Appreciate those of you who jumped in and asked questions. And so again, if people want to get more, how could you not want more of the Kitti Sisters? You can go to the website, thekittysisters.com. That's KITTI, kittysisters.com. Or you can email to, I'm going to say it slowly, thekittysisters at thekittysisters.com. That's a practical joke. Come on, ladies.
You know,
you just did that to fool me.
Simple, right? Everybody knows.
Like, just remember, just call us the Kitti Sisters, and you can't miss it.
Yes.
Okay. Well, look, you guys are charming and fun, and really enjoyed our time here today. So I'm going to wrap up here. Thank you for those participating. If you have questions and you're watching this on the video, go ahead and put in the chat box, and Annabelle or I will get back to you, or we'll get it to upon me or Nancy if we need to get some professional help on that. Annabelle does this every Wednesday at 2 o'clock on multifamily investing to help people get started in the process, or if you're looking for more deals and to work with more professionals. Often she brings in guests. Often she'll talk about how to get started with her. So if we can help, please reach out to Annabelle. Come back next week, 2 o'clock on Wednesday,